everyone, Vincent Nguyen here for Tip Line. I've been out the last week or so. That's why I've been absent from the channel. I apologize. I've been in Berlin working the last week. I'm back this week. Got back late last night, and I thought, oh, awesome. Let's jump on. I was telling the team, let's get on around 7:30. We'll do some live and talk about charts and review last week and look forward to next week. And I realized, oh, wait a minute, tomorrow's Monday and it's Labor Day. That said, no market. But I hope everyone's having a great weekend. Lucky for you, I had some thoughts about my relationship with the stock market. I had some thought about your relationship with the stock market and how it affects us at just and internally, and it affects how we trade and how external factors affect how we trade and how much money we make or lose. So it was like 4 or 5 a.m. in the morning, and I didn't want to do a video, so I grabbed Otter and I made some. I just basically talked to my phone. So with that, I kind of want to bring that up and let you listen to what my thoughts were that morning. And I mean, if I were to do it again now, I probably would fail miserably because all your logic is thrown out the window when it's 4 or 5 a.m. in the morning, regardless of what time zone you're in. I remember back when I was in college, some of my best philosophy essays were written at 3 or 4 in the morning. So that's my time that I do the best thinking because logic doesn't come in. You could care less about what's happening, in your life or in the stock market because at that time it's just you and your thoughts. So here's what I was thinking. Let's listen through this. Okay, so I use Otter to take notes and whatnot. So it's really good. It dictates what I'm thinking. It does takeaways and whatnot. So let's jump in and take a look at what my thinking was yesterday. Hey, just think when you were dating and you had, things are going well with your partner, and then suddenly you get this weird feeling, butterfly feeling or whatnot. It could go either way, right? You get this feeling of, depending on the situation, if you guys are madly in love, then you know what? That could escalate into something bigger and more beautiful. You could go get married. You can go on a honeymoon, take a trip together. Average marriage is 7 years, right? Or let's say you're dating someone and you get a weird sensation that, hey, something's not right. Is my partner dissatisfied with me? Are they going to leave me? So you kind of don't want to jump the gun yet. You want to watch what happens in either scenarios. So you sit and watch and you wait for signals. You wait for pattern of behaviors before you jump the gun. And sometimes I'm going to stop there for just a second. My thinking there ties in with how I trade as a trader. I look at patterns. I watch how external, I don't know what the external factors are. I don't know if some massive hedge fund just basically loaded up on short positions or they load up on a big sell order. We can't predict or control what happens, but we can sit back and observe what happens with the pattern that's forming, right? So with the way a market, with the way a stock trades or exhibits signs, it's an indication of what's to come. And that was my correlation with relationship as well. Like I said in the audio, I'm not one to give personal relationship or financial advice, but what I do understand with the correlation between your relationship with people in your life versus a stock market is very similar. So let's keep listening here. You're able to get ahead of the issue or issues, or you get ahead of the goodness of what's coming and you plan for it. Trading the stock market is very similar to that. You need to be able to learn how to read the behaviors of whatever ticker you're trading. It's just like a relationship, whether it's with your spouse, your children, your business partner. You need to be able to understand the dynamic of not just with them, but what's going on around them, their family, their friends, their mental health. The stock market's no different. So depending on what you're trading, that ticker lives in a family of stocks, such as the New York Exchange, over the counter, or NASDAQ, if you will. So when a stock price goes up or down, there are so many things happening to that stock that could drive it up or down. Whether it's fundamentals, whether it's, a big technical analysis that you're seeing coming up, it doesn't matter. You take all those things into account. It comes down to how you trade as a trader. That's what you need to assess. And then figure out at the core of what works for you. Then find a system that works for you. Are you trading short term? Stop there for just a second and interrupt here. So as a new trader and you're on YouTube, you're listening to people, you're on social, everyone's telling you, do your own due diligence, do your own TA. What does that even mean? Right? I mean, where do I even start? I mean, those were the questions that I asked myself years ago when I started trading. I mean, I followed pumpers, I followed people pushing stocks here and there, and I lost my shirt. I literally lost my shirt. I mean, they tell you that, but they don't tell you the how to do that. And my goal and my vision for Tipline is I want to be able to help you as retail traders understand the how to do those things, how to protect yourself from losses, how to not be greedy, how to think psychologically before you enter a trade. Are you ready mentally, physically, financially? Those are a lot of things that you have to assess beyond just pulling the trigger to buy or sell. Let's continue. Are you scalping intraday? Are you swinging every couple of days, buying low, selling high? Or if you're short seller bias, you're buying high, selling low? It doesn't matter. I mean, to me, it doesn't really matter how you trade, but what does matter is being able to recognize the signals. How do you get the signals? You get the signals through the bar chart, the lines. That's why this channel is called Tipline. And yeah, I know there are people out there who follow the market, follow the meme stocks, and see that there's a short, they're telling you there's a short squeeze coming. The lines don't matter, technical analysis don't matter, fundamentals don't matter. I'm here to tell you that is all bullshit. They do matter. They matter because the market is controlled by people with lots of money, and they will not lose. And that's why I'm here. Let's continue. You see the tipping point of when a stock is about to make a move, where that opportunity is. The opportunity is at the end of a cycle. Yes, you can make money. There are successful traders making money during the cycle of a stock. But the real opportunities, the opportunities that hedge funds, the opportunities that big banks, smart money, what they're waiting for lies near the end of a cycle or the beginning of a cycle. At the end of a cycle, guess what? That stock is either up or down at its highest peak or at its lowest peak. If you're a bull, you definitely want to find out where that turning point is, where that pinnacle peak is for that price to start reversing upwards. If you're a bear, you want to watch for how high the stock is going to go to be able to predict or project when the turning point is so that you can jump in and take that short position at the highest level possible. You might not hit the top or the bottom, but there are ranges that you can get close to. You cannot do that with fundamentals. Fundamentals tells you the state of the stock. It tells you, is it healthy? Is it making money? Are they in debt? Is there a PR coming that could or could not sway the stock price movement in one way or another? This is where a deeper, or even for beginners, a basic understanding of technical analysis makes such a big difference in your success as a trader. Yep, so that's something that I've narrowed down over looking at over many, many, many thousands and tens of thousands of charts and looking at many different um, studies, if you will. The 10 SMA, I'm sorry, the 20 SMA, the 50, 200, whatever, right? There are so many studies out there. And for me, I've narrowed this down to moving averages and harmonic patterns. Those two, to me, work hand in hand together. Those two studies, to me, work hand in hand together so that they will help me understand past price movements, where it's at today, and where I believe the price will be depending on if I'm scalping in the next 5 minutes, if I'm swinging a stock over the next 2 or 3 days or into next week, or if I'm holding long as an investor. Within that trading cycle, it doesn't matter to me if you're short bias or long bias. You should, as a professional trader or retail trader that understands the system, should be able to take advantage of of price movements and making money when the stock is on top. You take short position, come write it down, get out, wait for the next wave, go long, make money going up. Just because you trade and make money in both direction when the stock is going down doesn't mean that you're a shill. And that's what everyone on social is going to call you. They're going to call you a bear. You're shorting the stock down. There's no shame in making money. We're being taken advantage of by hedge funds, shorts. We're being cheated out of our hard-earned money. So we need to do what it takes to make that money back or to make the profit that we deserve. Let's continue listening here. And in future discussions, I want to dig deep into each of these different areas that we can examine on how to determine what is the best entry and what is the best exit, and whether that is the best play for you, and all the components that goes into assessing or quickly assessing. Sometimes if you're scalping, you might have a millisecond to get in and jump out in 4 seconds and make 10 grand. Again, depending on your account size. So these are the things that I would like to help you as a trader, and myself, of course, understand what makes a stock about to either explode in either direction. I don't care if you're a bear or a bull. The market works the same. But from what I understand in the market, just like in life, it's easier to get something to fall faster because it's going with gravity versus pushing something up because it's going against gravity. Funny story, in Japan, there are usually only one escalator going in a certain way. And I couldn't figure out why the escalator would only go up. So I was asking my business partner one day when I was in Tokyo, I'm like, hey, why do I have to walk down when I get to the train station? Why can't there be two? And it was simple. He said to me, When you're carrying luggage or even just a bag or whatever, nothing, going up is much harder. So that's why in Japan we have escalators going up. But when you're going down, you're going towards gravity pulling you down. So therefore, there wasn't a need for an escalator. I'm like, what about people who can't walk down? It's like, oh yeah, I mean, just like anywhere else, there are elevators for people who cannot walk the stairs. So the market is like that. You want, depending on what your bias is, you need to understand key signals which are made up of candlestick patterns. Those patterns would help aid you in making the best determination for whether a trade is good or bad. Or if you're already in a trade, if that ticker is about to do something. Is the volume low? Is the volume high? Is it starting to spike up? Are there any divergence? Just like in a relationship. If things start to get extremely rocky and heated up with your spouse or your partner, you might want to take a step back and, hey, trust me, I'm not one to give any sort of financial advice or relationship advice, but it's just common sense. You want to pull your. Okay, so at that point, of course, funny enough, my business partner he called me because we needed to talk about some stuff that was coming up. So the takeaway is, what is your relationship with the stock market? Are you in a love-hate relationship where you are holding a ton of bags and you're trying to get out underneath them? Are you new in the market? Are you still trading with a funny money account? A lot of things need to be assessed. If I could turn back time and do everything over again, I would not do what I've done. But then again, I wouldn't really arrive at where I'm at. But anyways, so there's a lot here that we can digest and discuss the psychology of trading as we move forward, obviously. With that, I really hope you enjoy this video. I really wanted to share this with you simply because it was something that came in my mind and I didn't have a chance to record a video, but I was able to record the audio. And I hope there's enough nuggets in here that you find value to like and subscribe to the video because I'm really excited to add more content. And with your support and contribution, I think we can get there together. Thanks again, Vincent Wynn for Tipline.